I say something very controversial. You ready here, Cody?
Yeah, I
Very
love it.
controversial. Okay. The house is not the asset. I've been calling it the asset because that's what people understand it. The house is not the asset. The house is a key to the bank's vault. And what you're going to get inside of the bank's vault is $4 more. You're going to get an 80% loan. If today we live in a fiat currency day and age, what that means is that our dollars are IOUs from the government. They're not backed by anything. Well, why not go get more IOUs?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Cody Crabb with Investor Fuel, and today I'm joined by Peter Skaggs, the owner of Investor Lighthouse. Peter works with buy and hold investors across the country, helping them not just get financing, but build long-term strategy across their real estate portfolio. We're going to dig into how investors should be thinking about financing and where a lot of people get it wrong. So thanks so much for joining us today, Peter. We're really glad to have you on.
I'm thrilled to be here, Cody.
Glad to hear it. Well, let's start here. How did you end up working specifically with buy and hold investors and in this world of real estate in general?
It's a great question. I knew I wanted to be in real estate from when I was a young kid. Actually, my grandpa, he had a real estate office. He actually built apartment buildings and things, and I didn't know my grandpa, but I heard stories about him. He passed away before I was born. I heard stories about him, and I saw the blessing that real estate had in my family's life. When he passed away, my grandma was able to carry on his legacy because of the real estate he owned, and she was able to support her and her 5 children, and comfortably, because of that real estate. And so I knew from a young age that I wanted to be in real estate. And then I had one of those rich uncles too, and then rich uncle was also in real estate. And I knew that he was investing. And so Cody, in 2007, right at the height of the real estate market, my uncle was looking for his next investment property, and I had a few dollars, and I asked him if I could ride his coattails. Basically, he found a home that he really liked as an investment, and I literally bought the house 4 doors up from him.
Wow.
And so I had no clue what I was doing. No clue. Was
And you said
scared.
this was 2007.
2007, yeah. So
Yikes.
scared.
Okay.
But everybody was in real estate, right, at the time. Everybody was buying real estate. I was scared, didn't know what I was doing, but I knew that my uncle knew what he was doing, and so I trusted him, and and bought that investment, and that investment was a major blessing in my life. Not to go too much, this is a little off the cuff, but I bought that property for $340,000, and over the next few years, I watched it go down and down and down in value to
Yeah.
$220,000 in 2010. I had it appraised at 220. I bought it for 340. And I ended up holding on to that property until 2020. I sold it in 2020. I sold it for 640. I almost got double what I had bought it for, but I had to go through that downside. So they say, buying bad real estate is like getting a bad haircut. If you wait long enough, it'll fix itself. So
Yeah, yeah.
but I learned a lot of lessons from that. And then since then, I kind of got the bug. I started buying investment properties, and I've learned a lot of lessons and started helping friends, who wanted to buy investment properties. And now, that's almost exclusively what I do is help new real estate investors make wise investment decisions around finding and financing investment properties.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Oh, that's an awesome story. I can't usually when you hear someone saying I invested in property in 2007, it doesn't end with and so that's what I still do now. It's very
Right.
much not. So that's
So true. Yeah.
pretty impressive that you're still at it. No, but like you said, if you hadn't held on to it as long, I mean, it wouldn't have worked out that way. So
Well,
there's
and
a lesson
maybe
too.
I'd add to that. Sorry to interrupt there, but I'd add to that, Cody, that the reason it worked is because I bought it different than a lot of people were buying it. Mine cash flowed. And that was important. So that cash flow kept me above water, even while the value went down 100 and something $1,000. So I lost a third of the value, half of the value of that not quite half, but a third of the value of that property. But I was able to hold on to it for another 10 years because of cash flow. And so that's an important piece that I teach my investors. It's like, hey, we can go try to buy in the right market that's appreciating in value, but that's more gambling. It's speculating. We don't know what's going to happen to the market, but we can be true investors, protect our principal and other things if we do if we buy something that has some cash flow. That allows us to keep our head above water when other things are when others are drowning around us, because they're
Yeah,
getting
I
lost.
think doing things in a smart way is just as important as doing the smart things.
That's right.
so
Yeah.
so
Love that.
yeah, I love that story. So you mentioned earlier, we were talking a little bit before the podcast started. You mentioned earlier this idea of buying power, staying power, growing power. I'd love to hear what is that framework? What does it mean actually in practical terms for an investor?
Thank you. Great question here. So the idea is that I am in actually the mortgage space. That's been my background for the last 20 plus years. I've been in and around mortgages. There's a lot of gurus, Cody, that teach people how to find real estate, find a great, property or a great market or a great deal. But there's not a lot of people who teach you how to finance it correctly. And financing can make or break your deal, just like we
Arguably, that's
talked.
more important than actually finding it is financing it,
That's
right?
right.
Yeah.
It really is. And so I've watched now as I've helped literally thousands of investors, truly, like no exaggeration, thousands of investors now invest in real estate. I've learned that we want to help you understand what your buying power is. And we have some disciplines in that. An example of that is you've got to have money ready to be deployed. It can't be sitting, oh, I've got money in my house, I just got to go tap it. By the time you've, got a HELOC or whatnot, those opportunities might have passed you by.
Mhm.
So you have to have money ready to deploy. There's a reason that Berkshire Hathaway and Warren Buffett is sitting on 300 and I think it's $70 billion of cash right now. It's because they're waiting for that right opportunity. He has plenty of places he could put that money, but he's sitting on it in cash because he's looking for the right opportunity. So we have to have cash. And then you have to be ready to deploy it. And this is what Robert Kiyosaki talks about in Rich Dad, Poor Dad. What investor has not brought up that book with you, Cody,
literally,
right?
it probably comes up on every single interview.
Every single one, right?
Yeah,
so
yeah.
I'm going to do the same. He says savers are losers. And that kind of hurt me because I was a great saver, and he was calling me a loser. And really what he was saying is that I'm losing out on opportunities. He's not saying I'm a loser. He's saying my money is losing out on opportunity. And so I feel very much the same way. We've got to deploy that capital. When we have it, we need to deploy it into the right investments. And then if we're going to deploy it, why not get the best maximum leverage on that, or maximum return on that? And that's through leverage, right? I can trade $1. I can bring $1 to the table and turn it into $5, with a regular mortgage. I can bring my 20% and get 80% from the bank and turn $1 into $5 to go buy an asset. And once we've done that, we want to get into great investing. What a lot of people got into in 2007, 8, what caused a lot of the mess was they got into these option arms. They got into bad loans that changed on them.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
The best financial tool anywhere on the market is a 30-year fixed mortgage. And so that's what we want to do. So that's an example of buying power. And once you've got buying power and you understand those principles, then we look at staying power. Because, I'm a buy and hold guy. You mentioned that in our introduction. I want you to buy, but more importantly, I want you to stay in the game, right? Too many people get knocked out of the game. 2007, a lot of people got into the game. Most of them got knocked out. We got to have staying power. So we look at things like liquidity. We look at, does the property pay for itself? Do rents cover the mortgage? We look at getting rid of risk, reducing your risk by, doing some key things, when it comes to that risk management. So we also, one thing that I think a lot of investors get lost on is they see great financing options like low interest rates. I had a lot of investors buying in 2020, 2021, and they shouldn't have bought. They bought assets they shouldn't have bought because they were focused on the interest rate, a temporary decision that they can change, versus finding the right market and the right asset and buying at the right purchase price, which are permanent decisions. So that's the staying power. We got to make sure that, that we have liquidity, that the property supports itself, that we're focused on the permanent, and that we're also transferring risk as much as possible. And then we want to definitely move into the growing power, and I can help you increase that. And that's where, I believe in buy and hold, and I can show you. You don't want to disrupt compounding, right? You hear, compounding is the eighth wonder of the world or whatever. You hear all these cliche statements around compounding. Well, buy and hold is the same thing. I don't want to be, Cody, I don't know about you. You seem like an excellent podcast host. I don't think, you're busy doing what you do excellent. And you probably don't want to go out and swing a hammer in the evenings or on the weekends and try to fix a house. I'm the same. I'm really good at doing mortgages. I don't want to be an active real estate. Now, it's not to say that's wrong or bad. There are a lot of people that are excellent at that should do that are great at that. That's not what I'm great at. I want something that is mostly passive, and will kind of move forward with me. And then the benefits of real estate and growth is you got 4, we call it wealth stacking. You get 4 income streams, you get appreciation, you get tax benefits, you get cash flow, and then you have that amortization where your clients are paying down your mortgage for you. And you've heard that from probably just about any real estate guy too,
Well, no, but this is the thing though. Our guests are all, not all of them, but a lot of them are pretty new to this. That's why they're listening to this podcast. They're getting interested and want to learn more. And I think when we go over stuff like that, I think sometimes it's important to be like, oh, 4 income streams. You know what I mean? Four
Yeah.
income streams. So
Yeah. You think about a stock as one income stream, maybe it pays a dividend, but usually it's just, hey, it's going up in value. You don't get tax benefits from that.
yeah.
Hey, if I put in 401k, no, it's not tax benefits, a tax deferment maybe, but not a tax benefit. And so really powerful things. And then obviously we want it to generate some income so that we can reinvest. And that's what I show people. Ultimately, Cody, we call that the freedom framework, what we just did: buying power, staying power, growing power. And all of it is moving you towards what we would refer to as a flywheel. And the ultimate goal is that if you don't need to own a lot. If you own a handful of properties, somewhere around 10, maybe a few more, a few less. If you owned about 10 great little assets and they're mostly passive and you buy them in the right market with the right financing, then what that should do is create financial freedom for you.
Hmm.
I genuinely believe that most, if they put their head, down and figure this out and work with somebody like myself to help them, they could be financially free inside of 10 years. And
Yeah.
I genuinely believe it. I've done it myself. I've seen other people do it, and it's through the power of real estate. So,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah. Well, and okay, that's how investors should be thinking about it.
yeah.
Now, I'd love to hear about like what are you seeing happening around you right now? People are getting hesitant because of rates, and people are like interest rates. People look at the interest rates and they get so scared. And
Yes.
and you instantly were like, oh, they shouldn't be worried about that. I would love to hear, well, I mean, we maybe should worry about
Yeah.
that. My point is, what should they be thinking when they see the interest rate? Is that like a deal breaker? Is that like a let's jump on it? Or what does that mean?
Yeah, Cody. The number one question I get as a mortgage guy, I bet you can guess what it is, right? It is, what is the interest rate, or what are
Yeah, of
interest
course. Yeah.
rates, right? That's the number one question I get.
Uh-huh.
And I get it. I get it. Candidly, we're taught to look at interest rates, because that's what's advertised on the billboards or on the spam email or whatever it is, right? In the mailers, that's what's
Yeah.
we're taught. And an interest rate is important, but it's fifth on the list
Wow.
of importance. And yet we make it number one. If you bought in the right market, a market that's going up by 4, 5, 6% per year, and I can show you some great markets that are going up by that right now. If I show you the right market, and then I can show you the right asset, you're buying the right asset that, the purchase price is, a lot of the investments we're doing these days, $150,000 to $250,000 purchase price.
Huh.
And so you're like, wow, where is that? I don't know where you're at, Cody, but I'm here in Utah. You can't buy
I'm in
a
Utah as well. I'm in Salt Lake
yeah,
City. Yeah,
yeah,
near Salt
I'm in
Lake.
Draper. I'm just south of you. So
Yeah.
so awesome. So yeah, Cody, we can't buy a house here for less than probably 500,000, right?
Yeah.
In this
Yeah.
market. But I
Very
can
true.
show you great markets where we can buy a property for $200,000, and it's a 3-bed, 2-bath, beautiful new construction, and it's renting for 17, 18, 1900 bucks. For you and I here in Utah to get $1,800 out of a property, we'd have to buy a $500,000 house,
Easily.
and
Yeah.
we want to make sure that we're buying in the right market, a market that's appreciating, that has, good economics, good growth. We want to make sure that we're buying the right asset. We want to make sure we get a good purchase price. Of course, we're going to buy, we've got market values that are going to, limit it, but ultimately we want to make sure we're getting a good price.
Yeah.
And a good rent to purchase price is important for investors. What we just talked about there, 1,700 to 500,000, that's not a great, but 1,700 to 200,000, that's actually pretty good,
Hmm.
And so purchase price, and then we want to make sure that we have a team around us to support us, because again, I want to be passive. I want to be a passive investor, or mostly passive. And so I want to make sure I have a great team. Those are more important. Those will make you more money than what your interest rate is. I just showed a young lady this morning. She was being told, oh, I can get a 5.75. And I said, you can. And I showed her how we could get her a 5.75. She ended up selecting a 6.5% interest rate.
Hmm.
And you say, well, why would she do that? She's going to reduce cash flow, and because I took her from the 25% down and paying 2 points to 20% down, no points. And again, interest rates today are going to be different than when you might be listening to this podcast, but ultimately the example of today, real-time example. And the reason we did that is because that extra 5%, and hers was like $240,000 purchase. That's 12 grand that she doesn't have to pull out of her pocket and lock up in this property. That 12 grand changed her payment. I'm going to forget exactly how much it was, but it was to the tune of like $80 a month, $90 a month, something like that. And so we went through the math on that, and it was like 10, 11 years to break even for her. I think it was actually closer to 12 years now, I think about it. So why would she, and that's assuming she gets rent consistently every month, month in, month out. And the one thing I know for sure is she's going to have a tenant move out on her eventually. She's going to have somebody not pay rent. She's going to have a maintenance issue.
In
And
12 years.
Yeah. Yeah, exactly. Inside 12 years, she'll probably have it inside of 2, right?
Yeah,
And,
no kidding.
as much as we don't plan on that and want that as investors, it's a reality.
Yeah.
And so I'd rather her control that $12,000 versus being conditional upon the tenant paying money each and every month. And she got it. And so her cash flow went down significantly. She was making I think we figured it out that she's going to earn like $21 a month, in cash flow. You're like, Peter, why in the world would she do that? Because she doesn't need cash flow today. She's got a good job. What she's doing is trying to take ownership of her future. She wants that appreciation. She's buying in a market that's going up by almost 5% a year right now. We've been watching it for a few years. She's in a market that's going up. She's buying a brand new construction, beautiful home and the tenant's going to pay that principal down. And in 5 years, 10 years, she's going to have a ton of equity. And that equity is going to make her far more wealthy than cash flow would be, even if the cash flow is a little greater than the $21. So those are things that we look at. I say something very controversial. You ready here, Cody?
Yeah,
Very
love it.
controversial. Okay. The house is not the asset. I've been calling it the asset because that's what people understand it. The house is not the asset. The house is a key to the bank's vault. And what you're going to get inside of the bank's vault is $4 more. You're going to get an 80% loan. If today we live in a fiat currency day and age, what that means is that our dollars are IOUs from the government. They're not backed by anything. Well, why not go get more IOUs?
Sure.
And,
Yeah.
And the easiest way to get an IOU and to get 4 IOUs is to bring my $1 and get financing from the bank for the other 4. I can turn my $1 into $5, and now I can own a bigger asset that's going to generate me a lot more wealth, and I'm going to get much better returns than if I put my $1 into the market, the stock market or something like that. So the asset, the true asset, is the mortgage. How's that?
Really? Yeah. Well, the comments on this will be interesting. I'm sure people have something to say about that.
Will be. Yeah.
No, but that's a really good point. That I think if you focus too much on the actual asset itself, or the house itself, or the property itself, you kind of are missing the whole point, which is the investment part. Like that's the real estate part, but the investment part is the part that's the reason we do all of this. So that's a really good, that's a good call out actually. Yeah. So we're kind of winding down here. We're almost out of time, but I did want to ask. So tell me, you mentioned you help so many people through this process. Like, how do you do that? Like, what does this process look like? If someone is hearing this and they're like, I want to learn how to do this and
Yeah.
get some help from Peter, how would they do that?
Yeah. So the best thing to do is we've got a free tool, and I don't know if that's okay for me to plug
Oh
here,
yeah, absolutely.
Cody.
Please do. Yes.
We've got a free tool that we love to give out, and it's on investorlighthouse.com. That's our website, investorlighthouse.com. And you'll see free deal analyzer on there. And if you were to click on that, you will be able to get access to an application. What that application does is it allows you to put in, it's just 15 simple questions. You answer 15 simple questions about a specific asset that you're considering, and it will tell you whether or not it passes the buying power, staying power, growing power test, the framework. And so they'll be able to go through that process to determine, is this we tell you, as a new investor, you don't want all the, the difficult terminology, the language that comes around, you just want to know. So we'll tell you green, yellow, red, and then from there you can schedule time with me to review that property. Let's say you got a red, on it, and we're telling you, no, stay, this is not a great asset. You can schedule time with me and we can look at why that is. Is there a way to fix it, to make it a great asset? Is there something we can do with the financing to improve the buying power, staying power, growing power for you? And then the really cool thing about this calculator is you can actually add a second property or different kind of financing you can add. And so you can compare like 20% down versus 25% down. You can compare property A versus property B. You can play with it and compare them, and it'll show you, those comparisons and what we would rank as property one, the best option, the second best option, the third best option for you. And so we want to give that tool away for free. And then ultimately what it is it's just, it's a tool for you to start thinking in those terms of buying power, staying power, growing power. And then you're going to schedule time with me to sit down and talk about it. Now, you may not yet have a property. Cody, we're going to look here in Utah and we're not going to find anything that probably hits all three and gives us a big green, beautiful, green sign to go. But if that's the case, I can show you markets where you can get green. And so if you reached out to me and said, Peter, I'm not finding an asset in my market, I can help you find a market, and I can show you actual properties that are going to get a big green shining light, let's go, because it passes the buying power, staying power, growing power framework. So that would be my call to action, I guess, Cody, is just go on to investorlighthouse.com, download that analyzer, play with it a little bit, and schedule some time with me, and we can help you take that next step.
Yeah, honestly, this sounds like a great asset and a great tool that someone could really take advantage of to see. And it sounds like it would be a good, almost like an educational, test it out kind of tool. Like maybe you feel like you know what you're doing, put those numbers in there and see if they agree with, you agree with them, because that's a great way to look at this. Peter, thank you so much for joining us today. We really appreciate having you on and you sharing all this stuff. And listeners, if you got something out of this, and I know you did, go ahead and follow us on YouTube and on the podcast platforms, and make sure you don't miss another episode of Real Estate Pros. Catch you later.
Thanks for joining us for today's Real Estate Pros show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.